you're going to see how clear it is. The signal we're about to get, that's a signal we haven't had in 40, 50 years. It took over 40 years to set up the signal that we possibly could get at the end of the year, guys.
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers.
Okay, guys, welcome to another episode of Talking Trades with myself, Kevin Wadsworth, and Patrick Karim. What are we talking about in Talking Trades today? Well, silver, and what is silver doing? How do we know what silver's going to do next? Well, there's various techniques that you can use, of course, and one particular one that Patrick's going to talk about today. I don't want to give it away by telling you now. I'll let Patrick explain what we're talking about. So, Patrick, silver and what it's going to be doing.
Thanks, Kevin. Look, there's often narratives. Well, silver can go up. Jamie Dimon, JP Morgan, paper silver shorting can go up. Well, look, guys, if you want to go in that way, that's fine, that line of thinking, but you got to admit there's stuff that you don't know that could be driving the price, right? And as a chart traders, we can't trade narratives. What if the narrative is bearish? It feels bearish, but the price is going up. It's breaking out. You know, even when you zoom out on the higher time frames, there's a possibility that the price is giving these crazy signals and you're there fumbling around in your fear narratives and you never pull the trigger, right? You can't spot the low risk entry points. Forget all that stuff, guys. I'm going to show you charts that should really big light bulb moment. You're going to see how clear it is. The signal we're about to get, that's a signal we haven't had in 40, 50 years, or it took that much. It took over 40 years to set up the signal that we possibly could get at the end of the year, guys. So forget all those narratives. Just look at the price chart, and that's pretty much should set you up. This is the best macro chart I could find that silver tracks. These are yearly candles, guys. Silver tracks gold's performance versus inflation. It doesn't track gold's price, right? Because if it'd be tracking exactly gold's price, well, silver should be way above its all-time highs right now, right? So why isn't it? It's not that it has a catch-up to do. It's not that it's getting sold by, JP Morgan, or insert your favorite reason why silver can go up. It gets smashed. All those negative words, right, that are super detrimental to a trader's success, right? You got to get rid of the emotions. Until I find another macro racial chart that silver tracks as much, for me, that's the chart to look at for guidance, for weight of evidence of where silver could possibly go. So look at that. Look at this yearly chart, guys. Look, off the 70s bottom, gold broke out on its own price chart, but also versus inflation. It's outperforming inflation. And it just rocketed up, 700%, 800, 1,000%, until it went super high in 1980s. But remember, this is a yearly chart. I reduce a lot of the noise. The close is what matters, right? So there's way more price action in the bulk of the candles than if you include the wick. If there's a wick and above a yearly candle, all that is noise from the smaller time frames. It happened, but it's not as important as where the candle closes. So that was the first run up. Great bull era for gold done. Golden bear market. Bottoms. Explodes again year after year after year. No red candles versus inflation, until it runs up 600-700% all the way up. And guess where it halts? Pretty much at the same area it did in the 70s, in the 80 top. So what we got now, we're starting to define that possible line as an important resistance line, right? You need 3 reactions to morph a line into a trend line, into something really meaningful. So now we had that second touch. So that whole run was just for us to create that line. We don't know it existed there, but now we do. I'll get to the silver chart, guys, right after this. Gold goes down, but it doesn't go down versus inflation as much as it did in the 80s, from the 80s to 2000. It goes down much, much less. So now it uses much less energy to get back and tag that line. And look at that line now. We had a third reaction in 2020. 2021, can't close above. So now we have a valid resistance area right there. So we know, we can't front run this, that we know that the next time we close above this on a yearly close basis, it's meaningful. This is a mega pattern, call it a cup and handle pattern, higher lows, flat plane. As soon as you break above a horizontal line, guys, you have a higher high, and you had higher lows leading up to it. And at risk of repeating myself, that means you're getting into a new uptrend. All right, guys, look at the silver chart. Does the same thing. Tracks gold up, discovers that 1980 resistance, down, does another beautiful run. Look at that huge wick. Who cares if it went up to $50, $48? Look where it closed the year, pretty much in the same area. So silver is tracking gold, not able to drastically outperform its 1980 highs. 2020, can't quite make it, getting very close. But look what's happening now. Silver is mimicking gold's ascent upwards. Look, if gold breaks out versus inflation in 3 months, it will be a yearly confirmed breakout, coiled and tight. These are the lowest risk, highest probabilities setups you could have. It doesn't guarantee that it's like it's going to go up forever, but this is extremely meaningful as long as we don't end up having a wick here. Silver, we have to see where silver is going to close the year there. But there is some resistance right here at 31, 28, 29, 30, all that. If silver is able to close the year at $32, if it closes the year here very solidly, then we have a double whammy. You have gold breaking out versus inflation. We have silver breaking out on its own price chart out of a 44-year pattern, coiled and tight. And the big difference, guys, is that line, again, we're not stretched away from it. We didn't use all that energy to get there. We're not stretched from the moving average. This higher low here made the setup very powerful. We're coiling the energy right under that heavy wall at $30, $31. If we close above that, guys, at 32, 33, a convincing close by the end of the year, this is not the top. This opens Pandora's box to much higher targets. And all these people calling out for these triple digit silver or whatever we want to go, in many years, there's a possibility that it gets there, but it opens the door for those higher targets. Look, it's not in a downtrend. What you're seeing is an uptrend. And that's my rant on silver, guys. It's setting up for a beautiful yearly defined breakout.
Yeah, amazing stuff, Patrick. And of course, also super exciting is when you don't just look at gold versus inflation. And of course, silver is tracking that, as you say, but then you can look at the silver versus gold ratio and determine, of course, whether silver is actually outperforming gold as gold is outperforming inflation, which is a whole different episode, of course. But using these ratio charts really does shine a light on what's going on in precious metals. Listen, Pat, thanks for all of that. If you enjoyed that and you want to hear more and you like the content, don't forget to subscribe, like, share, and all that kind of stuff. And join us again for the next episode of Talking Trades. Bye, everybody.